Today's topic is why waiting for the right time often fails with money. Hello, I'm Logi. Let's begin. Most people wait for the right time to act with money. The right market, the right moment, the right confidence. But waiting feels safe only emotionally. Financially, waiting creates hidden losses. This chart shows what inflation does to idle money. 1 lakh rupees today, without any action, loses value every year. At 6% inflation, that 1 lakh is worth around 55,000 in 10 years. Nothing happened to the money. Its purchasing power reduced. This is called the time value of money. Money today is more valuable than the same money tomorrow, because money today has time to grow, compound, and protect itself from inflation. Time is the most important factor in wealth building. When you delay, you don't just lose returns, you lose time itself. Once time is gone, it cannot be recovered. People wait mainly because of psychology. Fear of market volatility, overthinking decisions, fear of losses. These emotions feel protective, but they often cause long-term damage. Time does not wait for decisions. Whether you act or not, time keeps moving. Every delay has a cost. Waiting is never neutral. Here is a real-life comparison. One investor starts a SIP early and stays consistent. Another waits for the perfect time and invests later. Even with similar investment amounts, the early investor ends up with more wealth. Time and consistency create the difference. Waiting has a hidden cost. When you delay investing, you lose not only returns, but the future growth of those returns. Small delays today become large losses over time. Many people believe waiting for the perfect time reduces risk. In reality, waiting often increases risk. Markets move, inflation rises, opportunities pass. Time matters more than timing. To beat the waiting game, start small, but start now. Use systematic plans. To remove timing pressure, focus on long-term goals. Consistency always beats timing. The biggest financial risk is not starting imperfectly. The biggest risk is never starting at all. That is real money logic.